talk more about the markets. I mean, we don't have to talk about this, Joe. Specifically, mid caps and small caps. Russell 2000 has not been, pulling its weight here. It's off 6% from its high in late November. Joining us now is Carey, head of U.S. small and mid cap strategy at BofA Global Research, and it's your least favorite, I think. Now you prefer mid caps and even large caps relative to small caps. Now, what changed?
Well, I think, yes, that's right. We do like mid caps over both small and mega caps as we head into this year, and mid caps are slightly outperforming so far, and we think that could continue. I mean, I think the problem with small caps right now is that, for one, the profits recovery that everyone expected last year, that's still a hope rather than any evidence we're seeing. Going into last year, everyone expected that by the second quarter, profits growth would be double digit for small caps, and that expectation has gotten completely pushed out a year, and revisions are still negative. So we'd like to see better evidence that this small cap profits recovery is actually going to happen. And then small caps would have more risk on tariffs, immigration reform. So mid caps look like a better risk reward at this point, better fundamental trends there. And with rates, multiple rate cuts getting priced out of the market now, refinancing risk has reemerged for small caps. So we think mid caps are the better area, and being selective within that space makes sense.
Would that throw into question the broadening of the rally that we needed, because it was so concentrated in what we were just talking about? I mean, we were all assuming that it was going to spread out and all the soldiers were going to join the generals in advancing. This throws a wrench in the works.
Well, we do still think the market's going to broaden out. And if you
look at mid-caps, not small caps.
Yeah, I mean, if you look at the profits backdrop within the S&P 500, we are seeing that slowing of profits growth, which has continued to be expected to occur for the Mag 7 relative to the other 493 picking up. So we do like, within the S&P 500, the equal weighted index over the cap weighted index on back of that profits story, as well as on positioning and some other trends. So again, mid caps over mega look better, and that profits broadening is expected for small caps. But I still think, down the cap spectrum, there is more risk there. We aren't seeing that pickup happen yet.
But overall, you think that we will see multiples stay where they are and maybe earnings go up in what would be an average to good year? Is that as good as it gets, or does deregulation or some of these other things give us a better backdrop, or a worse backdrop if inflation stays sticky and the economy slows? What are we looking at overall macro? I know it's not your thing.
Yeah, no, for the S&P 500, so we cover overall equity strategy as well. We're looking for, about 13% earnings growth, 10% returns for the market. I think this is an environment where last year we did see a very multiple expansion year. Yeah. This year we think it'll be about demand coming back. We are expecting a manufacturing recovery. The backdrop for small caps, obviously, if interest rates remain elevated, the risks there, given the leverage profiles, are more elevated. So we do like cyclicals. We think it's a year where you want to be selective, that it's going to be a micro over macro year, that stock pickers, that will be a beneficial trend this year, given all of the themes, given, post-election policy can impact certain pockets of the market. So, it'll be a year to be selective, and there's a lot of opportunities, even within the small and mid cap space. Our analysts at BofA cover about 1,000 small and mid cap stocks. Okay. So, tilting up toward mid over small and mega, but being selective makes sense.